Hello, and thank you very much for joining. My name is Michelle Savage, and I am with XBRL US. And you're here today for our session on standard business reporting, a banking case study. So we're very happy to have with us today a couple of great speakers. We have Sean Ryan. Sean is FactSet's financial sector lead. He guides product development for that sector. Before joining FactSet, Sean spent 25 years as an equity analyst. He covered the financial sector at various investment banks as well as hedge funds. We also have Renee Vandermeer. Renee is CTO at SBR Nexus, and he is a member of the executive committee at XBRL Europe. Before joining SBR Nexus, he was a business unit manager at Visma and a consultant at Thoris. Renee has been very involved in the standard business reporting program in the Netherlands before joining SBR Nexus. So here's what we're going to be covering today. I'm going to start off with a little bit of a background on US government data management and some of the legislative actions that we've seen here in the United States. Then I'll be turning it over to Renee to talk a bit about standard business reporting in the Netherlands and to cover the banking case study. And then finally, we'll talk about US opportunities. And Sean is going to kind of lead the charge on that and give us some insights into the US banking industry here. As we go through the presentation, if you have questions, please feel free to post them by using the Q&A link that you see on your screen. So just submit a question, we'll take them as they come up. And also, if you have any kind of technical issues, please send us an email at support, SUPPORT, at xbrl.us, and we'll do our best to get you back online. So with that, I'm going to start off with a little bit about some of the legislation that we've had here in the United States. So there have been a number of very significant bills enacted over the past 7 years that focus very much on the importance of data in the US. First, I want to mention the Open Government Data Act, which is part of the Foundations for Evidence-Based Policymaking Act of 2018. The Open Government Data Act was designed to improve data portability, openness, and transparency. It also defined the term open data and created minimal standards. And it requires the use of open data by federal government. It also established the role of the chief data officer at each agency, as well as the Chief Data Officer Council. So the CDO Council was established under the Open Government Data Act. The second piece of legislation I want to reference is the Grant Reporting Efficiency, Accessibility and Transparency Act, also known as the GREAT Act. This was finalized and signed into law in December of 2019. And this bill mandates data standards for grants reporting, including the single audit package requirements. And then last, I want to talk about the Financial Data Transparency Act. The FDTA was established and signed into law in December 2022, and it calls for 9 federal agencies to require standardized data from reporting institutions. The FDTA was passed as part of the National Defense Authorization Act, and it also established, when the rule proposal for the FDTA came out, which was last year, it established certain elements that are required to develop property-based joint standards. And essentially it said that data that's reported needs to be rendered in fully searchable and machine-readable format. It needs to, number 2, enable high-quality data through schemas with accompanying metadata documented in machine-readable taxonomy or ontology models, defining the semantic meaning of the data. 3, each data element must be consistently identified in associated machine-readable metadata. And last, the data standards adopted must be non-proprietary or available under an open license. So right now, the rule proposal has been published. It's been out for a comment period. A lot of comments have been submitted, and we're waiting for the FDTA rule proposal to be finalized. Once that is finalized, and we're expecting potentially by the end of this year, then going forward, each of those 9 agencies will be tasked with developing their own agency-specific rules for reporting entities that submit data into them. Now, as part of the FTTA, there's a reference to standard business reporting, which is kind of roughly defined as business to regulator reporting. And there's a clause within the FTTA called Section 5893, which requires not later than 3 years after the enactment of this act that the Comptroller General of the United States submits to Congress a report on the feasibility, costs, and potential benefits of building upon the taxonomy established by this title and the amendments made by this title to arrive at a federal government-wide regulatory compliance standardization mechanism similar to standard business reporting. So specifically, they're looking for a write-up on how standard business reporting could potentially impact U.S. agencies. The reason that there's been such a big focus on data management is because there historically have been a lot of challenges in government data management. Data has often been difficult to use. It's incompatible across and within agencies. It's not interoperable. It's not automated or timely. Often data is not consistently defined and it can't be easily queried. Data management is expensive, it's labor intensive. Custom software often needs to be written for every data collection. It's hard to standardize vendor collection among the vendor community. And the result has been a bespoke industry of vendors supporting those submissions. Data management is often inflexible, relies on key agency staff or outside consultants. A lot of the systems that are in place today are very rigid. They can't adapt quickly to change. And the software is not updated on a regular basis. And that leads to a risk of obsolescence. And last, data is often error prone. There are a lot of data quality issues. Data has to be manually manipulated before it can be used, must be manually validated, and it can't be reliably used for AI or other fintech applications. So those are some of the challenges that we're seeing. And I'm going to stop sharing my screen now. And so now I'm going to turn it over to Renee, who's going to talk a little bit about the program in the Netherlands and the banking industry. So Renee, thank you very much.
Yes, hi Michelle. Thanks for having me today. Indeed, today I will talk a little bit about SBR Nexus and our program in SBR within the Netherlands. Let me first briefly introduce myself. There we go. I'm René van der Meij. And at this moment, I'm CTO of SBR Nexus, but I have also a background within the SBR program. I've worked on the Dutch taxonomy since 2014, sorry. I did this for the Chamber of Commerce, so the annual reports we have there, but also for the Bureau of Statistics and also for the social housing corporations and educational institutions. And from that, I also worked as a tribe lead for all the SBR services for the government. So we were a provider for the government for all the services around SBR. And at this moment, I'm also a chair of the technical consultation forum of the Dutch SBR program. So I'm still in the Dutch SBR program as SBR Nexus, but I'll come back to that later. Next to that, I also am contributor to Challenging the Chain, in which we described everything about the SBR program and how you can come to such a program there. It's freely available for everybody to download. So let's start with the agenda for today. I'll briefly introduce the SBR program in the Netherlands first, and then I'll also talk about SBR Nexus, who we are, why we are here on Earth, we always state, and what we do, and then also take you through the data products we have. But let's first kick off with the SBR program in the Netherlands. Now, if we go a long way back before the SBR program, but also maybe even before digitalization, what we saw is that every governmental institutions requested companies to report to them. So what happened in this case, a company used his typewriter or his text editor or whatever he has at that moment, made a nice report on that, freely formatted, put it on an envelope, put the address on it, put a post stamp on it, and post the report via mail. And then the governmental agency opened this envelope again. The reports were sorted to the right departments and given to them. And then what we saw is that every governmental agency had its own reporting flow with it, with their own authentication, with their own validation and authorization in that. And problems there were that information was not always comparable, of course, since the formatting was not enforced at all. Of course, there were some laws and regulations on which the reports need to comply to, but it's really freely formatted. Everybody had the opportunity to format it like they wanted to do then. And then the digitalization started for this reporting. And this was actually my own first experience with the digital government as we saw it. And this was really a wow moment when we had this. So this is actually a floppy disk of the tax office in the Netherlands. And you can do your personal tax income. There was a program on it, and you can fill in all the data on the disk, and then send your personal ID number, put it on the floppy disk, as you can see, and also my name, and put it via the post towards the tax office again. And I really felt like, wow, this is the future. We're getting there somewhere now. But of course, this was only the beginning. So what we saw is that actually all governmental agencies had their own digitalization program. And they all used different programs and different manners on how to exchange data, actually. So sometimes bespoke software was made for a certain governmental agency, but otherwise companies use their own software, but they had different semantics, they have different syntactics also, and technical agreements. So they can have all their own interfaces. For instance, you can send one via a floppy disk via mail, the other one you can fax your report to, and the third one you can send a PDF to, which we still call digital paper. So this was really a lot of spaghetti, as I always called it. But what we still wanted to achieve is that the companies are still able to use their own software to make their reports and to have competition in the market. As Michelle just stated, we don't want bespoke work on software now. So how can we actually achieve this? This was a very important starting point from the SBR program. So actually, in the early 2000s, the initial talks already were there. So we have the tax office, the Chamber of Commerce, which is our business register, the Bureau of Statistics, and also the banks were talking together on how can we actually achieve better reporting flow for everybody. What we'd like to do is reduce the administrative burdens in the end, have transparency to everybody on what is requested and how it's exchanged, and efficiency, so that if software is made for one governmental agency to report on, you can also use the same software with a different report to report to another governmental agency. So there we really try to do that. So to be able to do that, we need standardization, of course. One of standardization was on data definitions, try to reuse definitions as much as possible, and also try to collaborate in one taxonomy on it. We wanted to have one process which is usable for all requesting parties in the end, and the same technologies. So what we did is we started with some important predecessors of the program. We had the NTP project, which is the National Taxonomy Project, which was trying to achieve the first taxonomy. So this is in the early 2000s already. And we had Project Gein, the generic infrastructure project, to see how we can exchange it together. So this was really the predecessor of the program. In the end, we came to the SBR program together. And this picture actually shows it all. This is the most important picture, I think, of how SBR works. And especially in this picture, the most important, again, is the SBR framework of agreements. So that is the core of the SBR program in the end. So SBR is public-private partnership together to work on this SBR framework of agreements. So it's very important to notice that not only the requesting parties, as we say it on the right side, are a member of this SBR program, but also the private parties. So we have the tax office, Chamber of Commerce, Bureau of Statistics, etc. We have the banks also as a requesting party, which is a private institution in this case. But we also have the software vendors there, which create software of this program. They are also a member of this program, and also intermediaries like auditors, for instance. They're all part of the same SBR program and working on the same SBR framework of agreements. So what we did there is we also started for this generic infrastructure. In the end, we made one infrastructure which is available for all public parties. So whether you have to submit your report towards the Chamber of Commerce or to the tax office, you always deliver your message to the same interface, to the same shared service center, as we call it. It's called DigiPort for the government, which always has the same kinds of processes within it, which is specified also on the same manner. And on top of this, of course, is the Dutch taxonomy. So every requesting party has its own taxonomy, but they're all intertwined and connected to each other by reuse of elements. Now, this is already fully operational for quite some years. We have around 50 million messages on a yearly basis now over this platform. And it's important to notice that it is focused on business towards government. So in the Netherlands, we have around 1 million companies. So they're reporting 50, on average, of course, 50 reports on an annual basis. So this is where the SBR program started on the government side, also with the banks on the side, but I will talk about that at this, because we are, of course, SBR Nexus, and who are we and what are we doing in this entire program? That's important to know. Well, first of all, it's important to notice that data quality is crucial for banks in the end. Of course, thousands of data points are requested by regulators every quarter. So we really need to be on par on this to have this right. And in the end, what is very important is that the data quality directly impacts the financial reserves a bank must hold. And that is very important business case also for banks, of course. So the better the data is in place within your bank, you can work at it, the less reserves you need to have because you have less uncertainty on that. So what did we do and who are we then as SBR Nexus? We are in the end a not-for-profit organization founded by our three members, the ABN AMRO, ING, and Rabobank. So these are three major banks in the Netherlands. It's important to note that together they have about 90%, I think, of the bank assets in the Netherlands. So they're very big, of course, and therefore also they have a combined power to enforce the use of standards in the end. Well, it's very important that the banks also understood with each other. We should not compete on defining which data needs to come in and what definitions are, etc., etc. We want to have the high data quality. The only way we can do that is to collaborate with each other to make sure we all use the same kinds of definitions. So we can, again, do not have bespoke work in software, but have general software available which can work for all three banks in there. You can compete on customer experience, portfolio, interest rates, terms and conditions, or whatever. We never talk about that, of course, but it is important. Collaborate on the data requirements and the data exchange again. Now, we, as SBR Nexus, are the not-for-profit organization founded by them, and also in the end, we are trying to be as neutral as possible. We always are working on behalf of the three banks, not of one of the banks, and making sure they get the right data. But for that, of course, we have to collaborate with the entire chain, because of course we can just state, like we state this is the standard, and now you work as software vendors and please send me the reports. But this is not really how it works. So how do we actually work then together? So we work as a chain director, we say it. So we try to bring all the parties together, such as the government, of the business community and the financial sector, to reach on agreements on this exchange of information. So we work for the three banks, but we work also with the tax office and the Chamber of Commerce, for instance, together within this program, and also with industry associations from the business community, including CPA organizations in the Netherlands. And it's very important to make success that there is success for everybody in that. So what we do in the end, we try to develop the standards to create a taxonomy, of course, in the beginning. So how do we work then? Of course, first we have individual talks with all the banks, with ABN AMRO, ING, and Rabobank. Ask for them, okay, what data do you need? What are the definitions with them? Then we try to bring that all together, and of course talk then to all the three banks collaboratively to talk, okay, so this is the set we made as a beginning. Do you think this is a proper set? Then they will say yes or no, adjust it a little bit. And what we do is then we go to the other side as well. So we work together with software vendors, but for annual reports, for instance, with CPA institutions, of course, accountancy, the Big Four, we all work with them together to see, okay, so this is the request that the banks have come up so far. What do you think of it? Can we improve it? Can you deliver this data? Do we need to change it to make sure in the end we create a standard which is usable for everybody within the entire chain? And when that is done, we then create the taxonomy and make it publicly available for everybody, of course, to use within the chain. So this is, of course, the part of the taxonomy. But what's also important, to next to that, we also have our own infrastructure. So what we can see here on this picture is we have the public shared service center again on the left side. In the middle, we see also the private shared service center. And this is fully acceptable within the SBR program. Why? Because we use the exact same SBR framework of agreements here. So Digiport, which is the public shared service center, has the complete same working, same interface, etc., as our own private shared service center called the BIF. So this is very important. We all work on the same manner, same processes, same steps, and that's why it works for a company and a software vendor which needs to report towards the Chamber of Commerce for its annual report or business register. They can also submit their report towards us. It's just a different endpoint and it works entirely the same. So this is where we all come from and we worked on, but since then, of course, also the set of agreements were also expanded a little bit. And one of the important things we did within our set of agreements is we also used digital signatures within our processes, or for some in that processes. So this is also very important. So this gives us the ability to have assurance also in our processes to increase the trust in reported data, which is of course, again, very important on the trustworthiness of data and the financial reserve a bank needs. So how does this work in practice? So intermediaries, for instance, a CPA, sets their digital signature on a report stating, well, I have seen in this annual report. Next to that, he also makes a different report stating with all his audit findings in there, also signs there. And they use their personal certificate, in this case, a personal certificate stating that they are also a CPA, and send in the report. And we will then also check that within our infrastructure to make sure this person is actually a CPA. He's still in the register of the CPAs findable, and also all the signatures are valid. So this is a very important step we added to our set of agreements. So we have some data products. We started in the beginning with the credit reports, the annual reports, but some other reports we also have. This is a valuation report and the rental information. Next to that, we also have the KYC, the Know Your Customer taxonomy for anti-money laundering program, and also ESG reporting. But let's take a deeper look a little bit more into the data products, how it works and what we have there. So as stated, we started with the credit information. The easy thing about that is that we have existing laws and regulations. We also had the SBR program with the Chamber of Commerce, so we could reuse all those elements and taxonomies, parts of that. And we also have an existing SBR reporting flow, which we just can copy and reuse there. So this is where we started. This was quite successful. But in the meantime, we also saw a growing request for data, especially by the regulators. For example, due to Basel agreements, banks and other financial institutions must report increasing amounts of information, and supervision continues to tighten there. And what we try to, of course, to prevent is to have a new banking crisis. But this also means there is much more capital pressure on banks. So if you look closely to this pressure, you can see that some assets are much more capital intensive than other, and that's where real estate comes in. So that's where we expanded our own program, because it's a very significant upfront financing requirement in this case. So there are some challenges actually within the real estate sector, because if you look into the real estate, we have actually limited law and regulations. There are some guidelines, but there's no governmental institutions asking for a real estate valuation report. We can also not really have reuse of elements of Chamber of Commerce, for instance, or tax office, because it really is a different area. And also we don't have a uniform existing reporting flow which we can use. So we really have to start up this program. So what we saw is that there was lots of bespoke software, just as Michelle said in the beginning, again, working on these programs, and then also have bespoke software within the banks to make sure that the valuation reports can be exchanged. But we want to have competition there on this market. So how did we overcome this challenge? This is where we come in. So the most important factor which comes in is having a driving force. So in this case, the SBR, the banks took the initiative to start the program with the SBR Nexus, and we defined what data we need. And there was, in this case, one big software supplier, which we can also use to also start with the standard, because there was not a standard in the market yet. So if you have the biggest software vendor first, then we can make sure it's aligned with that, and then we can actually expand it to other software vendors as well. So, and another very, important aspect is the contractual relationships. So banks already have a relationships with the appraisers in the end. So what happens is that an entrepreneur needs financing for his real estate, and he goes to a bank. A bank can give this, but a bank needs appraisal reports. But the bank has direct contact with an appraiser to make such reports. So this is not via an entrepreneur. So there the banks really have power to make sure which valuator actually does the valuation of property. And therefore, they can also require that a PDF report was not good enough anymore, but we need structured data. In this case, of course, that's XBRL data. So from this pressure towards the appraisers, of course, the pressure also went to the software suppliers in the end, because they need to serve the appraisers. So vendors were asked to implement taxonomies and align their solutions with the requirements set by banks, and this created a very strong push for adoption. So if you look into the process, in how we created this, we started by defining the end state which we wanted to come to. So that's the full data exchange in real estate financing, from KYC information to the valuation report. And with a shared understanding of the entire process, we then divided it into separate phases. Once that was all in place, we move onto the rental information and to other products. And that phase approach gives us a very clear scope, and for each steps allowed us to implement successfully. So you can see here that we already have different SBR programs sent in, and all the dark is already in place at this moment, and we will expand it with the light gray solutions as well. So why did we do this, and why is this so important part for us? Because we saw that the process of financing is changing. So if you looked into how we did this in 2005, we saw that the duration of a financing process was approximately 10 days. So what we saw is that we had an account manager at the bank and an entrepreneur, and they exchanged some information. There was personal attention and advice towards the entrepreneur to make sure he was successful, and then we could start the financing. But what we also saw then changing is that we need much more compliance in the end, much more laws and regulations which the banks needs to conform to. So we saw that this financing process started moving towards 25 to 60 days, and there were much more documents which actually an entrepreneur needs to submit towards the bank. And what we saw is that the account manager was not really working anymore on the client relationship, but really on gathering the right information and making sure he could help the entrepreneur by asking for the right information so he can help within the process and not help the entrepreneur itself anymore. So what happened in practice, actually, that we saw that all these documents were requested from a client, and then all this data was overtyped in the database of the banks, and then it came into a credit report. But what we also saw is that lots of the requested information, complete reports, of course, were asked because that's what the company already has, but only parts of that data was actually used within the database of the banks for making all the financing risk available. Of course, this was very slow and error-prone and very costly. So if you looked into all the different steps that actually happened in this area, before we had SBR, we had a customer that needs to enter information in their system, which has its own data structure from the customer, has to print it, share the document, and then it was done by the client. And then the account manager has to receive it. Then he would retype all the data, put it in the bank system, then make sure it's on the data structure of the bank again. Then we have a financing decision, and then granting a loan or not. But with SBR, we can, of course, shorten this for a very important part. You can see the amount of steps we are not taking anymore. And now we can put it back to the financing process of only 5 days. So there's no manual retyping anymore. The process is much faster and also less prone to error, and decisions can be made much earlier. Financing that took months can now be completed in days again. And of course, which is also very important, that the account manager can now again has his attention to the entrepreneur again and not to the process anymore. They can give advice instead of spending their time on gathering and reprocessing in data. Now, this is how it works now, and of course, we can all see what's happening next. We can even do this probably in minutes in the future, especially when we have improved business rules and models. So this is all in place within the banks. This is fully operational. This is a big success. And what we also saw is that we could really reallocate people to do much more different work within the banks, in which they have to use their brain again and not just retyping information anymore. So if we look into what are the lessons learned, we have for success, it's very important to have the contractual driving force. That's why you can really define a new taxonomy and push the market and enforce the standard. But it's also important to start small, but before defining really the deliverables which you want, create also the end state which you have in mind to make sure that every step you take is having that end state in mind. And if you have, what we also saw is that if you have a new chain, in this case, the real estate, you can also start with a self-developed portal first to do some testing together to see what's possible and what's not possible before opening it to the entire market. Now, what we also saw within this process is that validations are crucial also for the data quality to make sure we have internal consistencies within our taxonomies. We started around 6 years ago with the real estate taxonomies. We are now 3 versions, I think, or 4 we've made so far, and the amount of validations are up significantly to make sure this data quality is there. Next, collaboration is very important. Collaborate with all the stakeholders within the chain. Test and evaluate with all of them to make sure you can improve and to make also everybody responsible for the end result and also share the benefits of the end results. Now, some things we didn't mention before, but which is also very important, that in the end, mandatory SBR reporting was crucial for market adoption. As we can see, there are many, of course, upsides on having SBR reporting. But in both the government as in the banks, we saw that it really became a success when there was mandatory reporting in the end. If they don't have to change, they will not change because they have to do an investment. Even that the investment will make sure that we can do it much more quicker. Reporting in the end, we really need to make it mandatory to have the change there. And the second one I want to mention also that the change management is also crucial, especially also in the banks. What you can imagine is that in the previous process in which people were retyping information in the system, putting it in and work on it for 40 days, for instance, and then have a green light that they can finance it again, change to we only get red flags. And why do you only get red flags? Because all the green flags are already automatically, of course, approved. So that's where a person did not have to look into. So the first thing that somebody in the bank will think is that the program is not working, but because I only see red flags. But that's because the green flags are not visible for them in the end. So the change management and also to help them understand what we're doing here and why we are doing this is very crucial to make this a success and also to make the internal employees in the banks employees the program. So that's it. Thank you for your attention so far. If you'd like to connect, please do on LinkedIn. And if there are any questions, I can take it now or later. Leave that to Michelle.
Renee, thank you so much. That was great. Really, really interesting. I think we do have a couple of questions, but I think before we go on to those questions, let's bring up Sean, and we want to talk a little bit about the US market, and then we'll kind of all come back together again at the end and go through some of those questions. So
yeah, great.
Great. So thank you. So Sean, we've heard a lot from Renee about the program that they have in place and how that works. We know obviously the United States is quite different. What would you say are the unique differences in the US banking industry that would need to be considered if digital data collection was to be introduced here? And how could those issues be potentially addressed?
Sure. Thanks for having me. I think that the biggest difference is just the much greater fragmentation of the U.S. banking system. We've only had interstate banking here in the U.S. since 1985, and even after 40 years of kind of steady consolidation, whereas the top three banks in the Netherlands, as Renee mentioned, are perhaps 90% of the banking system there. Again, even after 40 years of fairly aggressive consolidation, the top four banks in the U.S. get you to maybe something just over half of the U.S. banking system. And so you don't have quite that concentration of being able to just get a few people in a room and make that decision. And there's an important dichotomy between those large banks and smaller banks. Of course, the larger banks, just like ABN, just like ING, just like Rabobank, the JP Morgans and Bank of Americas of the world have the wherewithal to implement these tools on their own. But the long tail of smaller regional and community banks in the United States do not. They would be reliant upon probably their core service providers, either the legacy ones, the big three, or the emergent cohort of cloud native providers. But they would generally not be doing that on their own. So that's one component. And then competitively, it's hard to know how that shakes out because if you think about what this does, I think of historical analogs, it sort of does what containerization did for freight or what securitization did for risk, just that standardization, taking out human hands and touch points to reduce errors and enabling just a great reduction in friction in the entire process. And so in any process that relies on it, you're improving speed to market. So one thing that does, presumably, is expand the scope of loans that can be scored rather than underwritten. So, underwriting tends to be kind of labor-intensive, time-intensive. Scoring, it's like applying for a credit card online. It pulls data points, and if it fits the model, then credit can be instantly extended. So again, takes friction out of the system, allows for much faster and generally more inexpensive allocation of credit. However, that's going to tend to pull business away from those community banks and toward the larger banks that would be building and implementing those credit scoring models for credit extension. On the other side of things, Renee mentioned real estate, and that long tail of smaller banks in the U.S. Tend to be much more exposed to real estate. That's really commercial real estate tends to be their bread and butter. And so, to the extent that you could crack that nut, to the extent that this can permeate the real estate market where there's an enormous amount of friction to be taken out, then that could be a big win for those banks. I mean, in the U.S., the real estate market in particular, from both as a market overall and in terms of the data that banks rely on, it's very, very fragmented, and you just have this inchoate patchwork of standards and formats, and so it's a real bottleneck. And of course, you have entrenched interests that profit off that opacity and those different standards, the friction that creates. But to the extent that can be overcome, and it pulls an enormous amount of friction out and can actually make those smaller banks much more profitable too.
Okay. With the fragmentation that you see, with the community banks, do you think that software could play a role in kind of helping to make it easier for them and kind of bringing them a way to benefit from this?
Oh, absolutely. It's like anything. It's a force multiplier. It'll make the people they have much more productive and enable them to make faster decisions, better decisions, extend more credit at a lower price with lower risk. And that's, across the board. It's just that you have the added wrinkle for the smaller banks that they're not going to be doing this in-house. They would tend to be reliant on, the Fiservs of the world, the Jack Henrys, or again, these emergent cloud-based competitors. And you might actually see more of that done on the cloud side, if only because those banks are highly motivated to reduce their dependence on the large legacy core service providers.
Okay, great. And we talked about real estate, and Renee also talked about know your customer. What aspects of kind of the SBR for banking or SBR Nexus program would be immediately applicable, do you think, to the banking community in the United States?
Well, I think there's a really broad range of applications. I think those kind of compliance aspects certainly, and that's another factor we didn't really touch on. But the other piece of the pie in terms of adoption is regulators, and so of course, one thing that could overcome or at least mitigate the friction or delays caused by the fragmentation in the system is the regulators prioritizing it. And to the extent that U.S. regulatory agencies do make it a priority, then they can of course accelerate adoption very substantially. But beyond that, again, you would see it, I think, fairly quickly applied to credit scoring. And also, think about shared credits, right? Any kind of situation where a syndicate of banks have to share data on a given customer or a given credit. Again, it's just taking friction out of that system and allowing these decisions on risk tolerance and pricing and to be made more quickly and with less of a gap between anybody's mandate or risk tolerance.
Okay, so you see those as kind of major benefits that the U.S. could recognize.
Oh, absolutely.
Okay. And are there other programs that are more specific to U.S. markets that you don't see in the Netherlands where you think banks could benefit from kind of a program like this?
Sure. I think, there's programs like the SBA, right? So, this particular, lending program where, loans or parts of the loan are guaranteed by a government agency, the Small Business Administration. And so again, processes like that, just having that standardization can just really take a lot of friction out of that process. And this is a corner of the market where that guarantee is very, very valuable. But to the extent that the standardization of data enables better credit measurement, more accurate and timely credit measurement. You can take losses out, allocate that credit better, and therefore those government guarantees can go a longer way. You can extend more credit to more small businesses at the same or lower cost to the government.
Yeah, it's interesting you bring up the SBA because we've actually been working with the surety industry that provides surety bonds to contract, for contractors. And we have struck a little partnership with SBA where they're able to automate the consumption of work in process data from contractors. So like a lot of bond agents today, if they have a contractor that has a surety guarantee, they have to like key a lot of data into the SBA's online system for work in process. And we've created a product where they can do that automatically, just using an Excel spreadsheet that automatically converts to XBRL and then goes directly into the SBA system. So it eliminates a lot of the manual data entry and potential errors that are introduced there. So yeah, I think SBA is probably a really good opportunity to reduce a lot of the friction because there's so much data that's being collected there.
Right, and the cost of keying data in is real, but the even bigger benefit, I think, as you allude to, is just that reduction in errors. I mean, just the fewer human hands touch a pool of data, the less the risk of errors being introduced to it, the less the risk of it being corrupted and resulting in poor decisions.
Right. And then, the last question I wanted to ask before we bring Renee back in and have more of a group discussion is, if a program like this were to go into place, how would banks use, we talked a little bit about like they're using it for credit scoring, things like that. How could banks leverage the structured data that they are able to collect from customers? Like what are other ways that they might be able to use that information?
Sure. I think, depending on the scope, and if we just sort of grant arguendo that the data is going to be of high quality, I think it also, kind of the part that is intrinsically a bit speculative, but gets kind of interesting is by having this much more timely, much more accurate, and more standardized data on a range of customers, it enables kind of the creation of new products and services around that. There are things that may have been cost prohibitive, or even if it's not the explicit cost, just kind of the uncertainty or risk attached to them. By lowering those thresholds, it just enables a lot more creativity to be brought to bear in terms of how credit or other products are structured by banks. And so we can't know necessarily what form it will take, but we can kind of, I think, assume with some certainty that there's going to be some unforeseen benefits of solving problems that hitherto probably aren't high on anybody's radar screens because they haven't had the tools to address them.
Right. Sometimes you don't know what you don't know, but
precisely.
Yeah, and I think the other benefit of structured data is that it's much easier to validate and check the data because it's structured. You can develop rules to look at things like signage and completeness that you can run against a set of data to check the validity of the data, the integrity of the data beforehand. So that's kind of another benefit that you see with data that's in structured, standardized format.
Very much so. I mean, working at a company like mine, I can attest to the value of that.
Right. Right. A fact set has like a lot of work that when you pull in a lot of this data. So, okay. So we have a few audience questions and I want to bring Renee back. Renee, if you can join us again, thank you.
Yes.
Let me go with the audience questions first, and then we have a few other questions. So, Renee, I think some of these questions are for you. What are the challenges of using this approach for sustainability data?
Yes. So, of course, the lack of standards is also there a problem, but also we all have the same problem here. All the businesses have the same problems, and also governmental institutions have the same problems. So, luckily, in Europe, of course, we have the ESRS, for the CSRD requirements, in which we define on what data is can be exchanged for ESG reporting. And we can use that as is, so we do not have to create the taxonomy ourselves, but can just make sure that people can actually file their ESRS reports also towards the banks if they like. So that's for us, it's very easy because we only have to open the gates to state it like that. But the problem is that we, if you look into the standards, actually the banks need much more granular data than the standards are, because we really want to have this data on asset-based level in the end. So a bank finances its assets, of course, of its customers, and they want to know the data from that and not from the company as a whole. So we're also working towards that. So what we did already is we defined on 3 deepest layer than the CSRD requirements are on what definitions are. We worked together also with sectors on that. For instance, the transport sector, we also have ISO standards there already. So we created already the data standard there. But now, of course, the fun starts with, okay, how do you have to exchange this data? Because I don't want to have all the data of the company, but we only want to have the data which is financed by that bank. So we're also working on this part. But at the same time, we also see that the software vendors are also lacking this ability at this moment. So we are also looking into, maybe you can also help them a little bit to also give information back, for instance, to them. So if they share information with us, we can share information back. So in the end, we have nice ESG reporting there. So there are lots of challenges, because we cannot just say, dear software vendor, please report all this data to me. We really need interaction there. And of course, for that, we need also new agreements we're working on at this moment.
Great. And you need to make sure that obviously the data, if it's at a more granular level, that it rolls up into the top line CSRD facts that are being reported to regulators.
Yeah.
So.
Yeah.
Okay. And then another question for you is blockchain used to record the digital signatures and associate all the accreditation attributes in the case of an auditor?
No. That's a short answer.
All right, that's it.
But I will explain a little bit better how it works. So in the case of an annual report, what happens is that the auditor creates a digital signature. So within this signature, and I think this also already answers the next question. Within this signature file, we call it a detached signature. There is a hash towards the annual report. And from this annual report, we have the hash in it, and then we also give a commitment to it. So in this case, the auditor gives a commitment to authenticate this document as a whole, to state this is actually the document I audited. Not this is my document, because it's a document of the company, of course, but this is the document I audited. Then next to that, the auditor also makes his own audit report, and in that he describes all his findings, like I went to the company, I did not see any strange things, etc., etc. And for that, he also gives a commitment, but there he gives commitments. This is my report. I fully agree with all the contents with what is in this report. And that hash code is also, again, within that same digital signature. And that is, in the end, signed with his personal certificate. We call it PKIO certificate, which stands for Public Key Infrastructure Government there. And because an auditor is within the law and regulations of the Dutch, in the Dutch laws and the regulations, so it's protected title. Only certain parties can give this certificates. And that's done by QTSPers, Qualified Trust Service Providers, and they are allowed to give this personal certificate towards the CPAs in the end. And they also have the check with the CPA register to see if somebody is still within this register when he signed it. So this is how this works.
Great, thank you. Let me go to some of my planned questions, and we'll go back to the other questions, which are fairly technical here. So So Renee, given what you've heard from Sean about the fragmentation in the US banking industry and some of the other challenges here, which aspects of SBR do you think would be most applicable? And what do you think would be more challenging?
Yes, I think the collaboration is still very necessary also in the end, especially when it is fragmented. But the answer on how to achieve this is as simple to state as it is difficult to actually make happen in the end. We really need leadership here also from the banks and trust in each other to make sure you can collaborate on this. So they can start an organization similar to SBR Next, of course, but it's very important that all the stakeholders have the same say in it in the end. They have the same amount of a share, do the same investment. So there's not one party who is really standing out and paying more, so he will direct what the outcome will be of the project. But it also means that you need, as a bank, sometimes need to comply with things. It's not fully in your own interest in the end, but it is in the greater interest, which will pay itself back later on in other things. So trust is very important in this and leadership, but then you can co-create these standards and really make sure that everybody, of course, uses the same taxonomy. Now, if you look into the shared service center we have, if you have agreements on how this works, of course, the shared service center was a very good idea in the early 2000s, but nowadays you will not do it like that anymore. So everybody can just have their own endpoints for direct reporting as long as it all works the same. But then, of course, that needs close coordination on all those banks that they are actually implemented all in the same manner, or an organization like SBR Nexus develops it for them and they can implement it themselves, but then they will all get on the same timely manner, the same updates on the system, so it all stays synchronous working for them.
Okay. And Sean, given your knowledge of the banking industry, what are your thoughts about the idea of trust and leadership in the banking community, which I know is, as you said, it's very fragmented. There's a lot of very small community banks, a lot of very large banks. I wonder if there's any organization or that you think would be, could help in making this kind of program happen here.
Well, I think there's two pieces to that. I think one is on the industry side, you have industry organizations. Probably the best known is the American Bankers Association, but there are others as well, and they're involved in policy and could at least help facilitate some of that. And then on the other side, again, as we mentioned previously, you have the regulators, and we talk about banks as though they're private companies, and they are to a point, but they also function a bit like NGOs. I mean, they're arms of policy, and it is not unfrequent for them to do things at the behest of regulators that they might not only ever do if business considerations were the only consideration. So there's probably a role for the regulators to play proactively here as well.
Right, that makes a lot of sense. And then I'm just going to do one last question, and I know we have a couple of questions that I'm actually going to reach out to these individuals directly and see if we can respond to those. Renee, these are kind of very specific technical questions, but just one last question. Renee, what were the biggest pain points that you saw in the rollout of the Dutch program? Because adoption obviously is the biggest issue, I think, with any of this, is getting people to do something different. What were the biggest pain points and how were you able to address them?
Well, the fun thing always is when you try to digitalize a paper reporting chain, you make it digital, then the requirements go up like 20 for some reason. So authentication, validation, all those things, identity is much more important than it was that we did before for some reasons. So sometimes it's also very important to be aware of that. Okay, maybe we cannot do this part, and this is indeed still a problem, But if we look into our current process, this is also a problem. So don't stop the program or start this part of the initiative at this moment. Please continue and let's work on this separately. So really make sure you have an approach in which you just start working together, start exchanging information and making it safer and better. Because also technology, of course, evolves in the end. So we can do much more now than we did when we started in the program. So that's very important. Don't have your requirements so much bigger than the paper world. And also another pain point is people don't want to change in the end. If they have something that works, why would I change that? Even though it might be simpler in the end, I need to do effort to make this change possible to in the end have the result about that. But now it takes me 5 minutes. Now I have to work for 5 hours, for instance, and then I can do it in 1 second. Yeah, let's just do it in 5 minutes. That's a bit sometimes how people think. But of course, this investment is done by the software vendors in the end. And then entrepreneurs sometimes need to go to new software versions. So there we see also some pain points. So people are really not willing to change there, and therefore also this is one of the reasons why this mandatory reporting is also so important. Really enforce this to everybody, then they have to change, and then they are happy with it. It's like, oh, why didn't we do this earlier?
Right, right, good point. So, and Sean, any final thoughts on this? I think that speaks to the whole regulatory point that you've been making, is that regulators are really important to this process. So any final thoughts on the topic?
Right. I think really in the end, at least in the U.S., banks are likely to take their cues from regulators, and it's much more likely to be adopted much more quickly to the extent that it is prioritized by regulators. But to the extent that it is, I think it's fairly clear that there's a lot of friction that can be taken out of the system to result in the better, more rational, and more economic allocation of credit.
Great, thank you. Well, I want to thank you both so much. I know we've run a few minutes over here, and we've got a couple of questions that I'm going to go back to you on, Renee, that are a bit more technical, and we'll respond back to those people. But thank you so much for joining us today, Renee Vandermeer and Sean Ryan. You guys did a great job, really interesting. And thank you to all of our attendees for joining us today and posting your questions. Thank you.
You're welcome.
Thanks for having me.
Thank you.